Hey guys, welcome back. Drip Coach here. We don't trust, we verify, and operate with integrity and transparency. Today, I got a clip from Jordi and Anthony Pompliano. Definitely enjoyed listening to their like weekly wrap up kind of thing. Like I said, Jordi to me is, I'm sure there are other people out there using AI way more than him, but he's one of the few that I can follow that is in this weird hybrid that I've kind of put myself in where it's AI, crypto slash Bitcoin solely, and health and wellness as well. It's like he's real big on like track your HRV, and I've kind of created my own Dr. Atlas. That was the name it came up with. But my AI, like I said, I told you guys, I think before, I haven't shown it yet, but it's me trying to create my own kind of Jarvis from Iron Man, where I'm just feeding it all sorts of data from every aspect of my life and trying to get it to optimize different areas. But what I like about Jordy's take is like there's not many people talking about this perspective on how things are shifting besides him and like Raoul Pal. And I forgot who said this, but something like a quote of when you bet against the consensus and you're wrong, you're an idiot. But when you bet against the consensus and you're right, you look like a genius and you can make a lot of money. So right now, everybody's talking about the doom and gloom of crypto and everything else, or specifically Bitcoin, talking about what's going to happen with the rates and all this stuff, and things just don't look good. But you got Jordy and Raul talking about how transformative AI is going to be, and then how handcuffed the Fed is with debt demographics and things of that nature. So at the end of the day, only one person can be right. And yeah, I'm kind of hedging my bet that the Bitcoin train, and nothing stops this train, it continues to go forward. The big print, as not Jeff Booth, drawing a blank on this guy's name, I can see his face. But yeah, that's coming. Larry Lepard. So in this clip, we're going to listen to him talk about kind of what happened with the FOMC meeting when Kevin Warsh spoke, and kind of how the markets were reading it incorrectly.
Right, Kevin Warsh, he had his first big day in front of the bright lights. Started off hot, didn't say good afternoon, said good day. Everyone was freaking out about that. I don't know. I thought he did a pretty good job. He didn't say a lot, which maybe was why he did a good job, because he didn't have a big attack surface. What was your take on his press conference, some of the decisions they made, their focus on this task force?
I think what we learned is he's going to be very different than Jerome Powell, and he has said that. He has very different views. I think the reaction by the media was just like the oil doomers and just like every other issue that has popped up. Tariffs are going to take down the country. Oh, he was hawkish. He wasn't hawkish. It's ridiculous. 10-year rates have been stuck in a range now since 2022. And in this weekend, I'm going to highlight to people, the only reason rates went higher over the course of since 2021 is because the Fed raised rates. Yes.
Funny how that works.
Yeah. But that's it. Like, everyone is worried about the debt. Everyone is worried. They're going to go higher. Every time it ticks higher for a week, then everyone comes out and says the world's going to end. Then it ticks right back down. Two things that happen. Number one, he's a believer in productivity. He announced task forces. Now, my kind of thought on the task forces, he believes, which I do as well, and I think a lot of younger people, non-academic, and I consider myself non-academic because of how much I hated school, but I understand macroeconomics extremely well. I think the Fed has been in the habit since 2009 of micromanaging everything. Every word, every speech. It's ridiculous. At the end of the day, they do very little unless they have to come in and save something. That's it. Like, they're not moving rates much at all. They're going to cut 25. Nope, now they're going to raise 25. Who cares? It's not going to change anything. It's a function where the market gets overly dramatic with it. So the task force to me is, are we looking at this the right way? And I have said repeatedly, GDP by itself is a horrible measure of an AI world. But let's use inflation. He has been very outspoken that he thinks the way we think of inflation and goes through it is wrong. He did not change, and he won't change, the target inflation rate. And the reason is because we're kind of trapped into that. If he came out and said, I don't actually think the 2% means anything, we're going to go back to something else. But what he did say with inflation, and what he said publicly, is, I think the trimmed mean is a much better measure. And I completely agree. I believe in getting rid of these things that are way on the bottom, way on the top, and just kind of sticking with where the bulk of things are, using the median, and every single part of the median and trimmed mean, it's been getting in a tighter range, meaning most things are kind of in this point of like 3%. And the extremes with oil and with all this stuff, it blew out. I think one of the most important things that's happened in the last month is, as the news got worse on the Strait of Hormuz, oil prices continue to move lower. We've seen no ships go through, yet the urea price in New Orleans has collapsed back to lower than it was, meaning fertilizer. Somehow or another, the world had the most important thing shut down and nothing changed. How is oil ever going to sustain an up move at this point if it didn't just do it now? Now, maybe that'll change over the summer as we hit rock bottom, but I learned with prices, that's a warning sign. And the reason that matters is 1 year inflation swaps, which are the only thing that has led the rise up in 2022 from the Fed. It led the entire time. Said, okay, inflation's going higher. It collapsed over the course of the last 2 weeks. So all the crap I gave to Trueflation, even though we did get above 4% and they broke away from their CPI kind of guide, it stayed near what the median did and what the mean did. And now we have a Fed chair that's trying to create a task force to agree that, okay, we shouldn't be watching this thing. I think that means actually at the end of the day, when they focus on inflation, that they're going to realize that it's actually lower than what we thought it would be. And if it couldn't go higher with that, how is it actually going to go higher when you strip out memory prices and you strip out all these one-off things?
Mm-hmm.
That is interesting. Again, like far beyond my scope, but because I only really track the price of Bitcoin and then I live outside the US, so I don't really see how things are being impacted with oil and stuff like that. But what he's saying, and like we didn't see anything like really blow up essentially with what happened in Iran. And that is very, very interesting. Like, arguably, we can say we're at the tail end of this conflict, whatever's going to happen. I thought there would definitely be a deal signed. Like I said, right now, as I recorded this video, it's June 28th. And I had made the prediction multiple times stating that there would be something to sway the markets by July 4th. Doesn't look like that's coming, but still have time. Maybe by the time you see this video, it will or won't. But the main thing Jordi's talking about is that like things didn't really blow up as people expected. Now, if this prolongs, then there can be much bigger impacts. Like they're talking about other countries have, tapped into reserves and they don't have much to go on and all these other things. And this can't drag on much longer. But as of right now, it's like the markets didn't really react as bad as people had forecasted originally. Like, yes, things spiked, but like he's talking about the urea prices, which go into fertilizer, and then just the price of oil now has come back down. What is it as of this video? Yeah, that is impressive. Like, take a look at that. Like, so we were in this 60 range here all last year. So this is August last year. That's June. So that's 65. And then it got down to a low of like 60. What's this low? 60. And here we are right now sitting at 69. That is pretty insane to say that, yeah, here's the conflict. We peaked, 115 and it's been dropping ever since. And what he's stating is like, yeah, if this didn't blow it above like 200 like people expected, he's like, well, then what will? And obviously, if this did continue, I think there would be some issues, of course. But that's why I'm still kind of bullish going into the end of this year, saying that we will be back above 100K by the end of the year. But as of right now, like I said, I've been proven wrong. So eat that humble pie. There's been no kind of deals or positive market catalyst for Bitcoin right now. But the jury's still out. So we'll have to wait and see if that does happen by July 4th, like I was stating. And this is the trimmed mean he's talking about. So you have like PCE, EX, like all these different metrics. I showed it in my other video as well. But when you look at like the mean, you can see, like you said, it's been getting in a tighter range. So we've been sitting between 2 and 3. Whereas we didn't have anything above 4, spike anywhere in there. And then when you look at it over the last 12 months, it's sitting here between 2.3 to 2.4. So I guess Warsh could argue it's like, yeah, let's just get rid of those outliers, like, beef due to whatever that screw worm problem is right now, and oil due to the Iran conflict. It's like, all right, those are causing things to spike higher. Let's remove those and just look at the average. So like I mentioned in the other video, it's like, yeah, they're not changing the goalpost, still 2%, but they can, just pick a different measuring tool in their basket and go, let's look at this one now. And yeah, markets can then decide how to react from that, and it can be favorable, especially again for Bitcoin. So one way or another, I believe that there will be money printing coming. I believe, like I said, the Larry Lepard thesis, the big print is coming one way or another. Or kind of like Lynn Alden said, it's like a bunch of small gradual prints. Maybe it's not one big print. I don't know. But that's what I was mentioning in the very beginning of the video. It's like if you're betting against the consensus and you're right, then you look like a genius. But if you're betting against it and you're wrong, well, then yeah, you just look an idiot. So making that bet against and being right is where the massive gains can be made at this stage in the cycle. If you're hedging on assets that the government can't print, can't seize, and can't control. And for me, the only one out there, that's Bitcoin. All right, smash that HBO special, help a brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.